Michael, thank you very much indeed for inviting me to be with you here today. Thank you very much indeed for all of you coming to be here at this event. Asia House plays a very important and useful role, and I've been involved with this events in this organisation on several occasions. As you know, Asia is a vitally important part of the world economy, comprising 38% of global GDP, with most of the world's population, with excellent growth prospects, as well as full of challenges relating to economic development, climate change, infrastructure. And in the coming decades, the UK's economic prosperity will be progressively more intertwined with the prosperity of Asia. And that's before you consider the implications of Brexit, which I'm not talking about today. Therefore, it should give us great comfort to know that there's an organisation like Asia House, a centre of expertise and driver of economic and political engagement between Asia and the UK, based here in London. And so I'm delighted to be here this morning to support also that engagement. Today I wanted to speak about the Asia Infrastructure Investment Bank, or AIIB, and explain what the organisation's about, to look at some of the work that we've been doing, particularly, as you said, in relation to private capital. I'll happily take a few questions, but I'm also looking forward to hearing what the panel have to say and having the opportunity to chip in at some point during that discussion as well. As you know, the AIIB opened for business in January of 2016. We're the world's newest multilateral development bank. We're founded by 57 countries to provide finance for infrastructure projects that support the sustainable economic development of the Asia region. Those founding members include many Asian countries, most Asian countries, but also many countries outside Asia, what we call non-regional members. Our definition of Asia is quite broad, including Oceania, all the way up to the eastern coast of the Mediterranean. The UK was a founding member of the bank and was the first major industrialized country to sign up, a decision in which I was very closely involved in the final months of the coalition government of which I was part. All these countries have come together, pooling resources and creating an institution with $100 billion of capital. And the Asian character of the institution is enshrined in the fact that the regional members, the Asian countries, hold 75% of the shares, the non-Asian or non-regional members holding 25%. The bank uses our capital to offer financing on commercial terms to members to support infrastructure projects across Asia and beyond. We can offer loans, make equity investments, and will develop other financial products, including guarantees, for example. And we can finance both sovereign and non-sovereign projects. To help deliver and focus the objective to which we're working, we've identified three thematic priorities, three areas where we want to focus our work. The first of those is supporting sustainable infrastructure. As you will all know, countries around the world, but particularly in Asia, have made substantial commitments with infrastructure implications as part of the Paris Agreement and of other international agreements. We see an important role for the AIIB in financing sustainable infrastructure, renewable energy, sustainable cities, other projects that support that objective. Secondly, improving cross-country connectivity, helping to support infrastructure, be it transport, be it energy interconnections, which help to bring Asian countries closer together and also which help to bring Asia closer to the rest of the world. And thirdly, mobilizing private sector capital. And that's what I want to dwell on a little bit more in my remarks today. We've been looking at all of these topics and will continue to do so through the startup phase of the institution, if you like, and we've been thinking in particular about mobilizing of private capital. Given that we're today here in one of the world's major financial centers, and many of you in this room are involved in the financial sector, I will spend the rest of my time just talking a little bit about the research that we've been doing and to listen to your ideas about how this problem can be dealt with and what role the AIIB can play. I'd start by observing, of course, that this isn't simply a problem for Asia. During my time in government in the UK, I was involved in introducing the UK guarantee scheme, setting up the Green Investment Bank, creating the pensions infrastructure platform, putting in place contracts for difference for energy projects, and indeed also launching the UK's National Infrastructure Plan. all of which were aimed at whole or in part at making it easier for private sector money to come into infrastructure in the UK. Of course, some of these initiatives were successful, perhaps others less so. You can all judge that. In Asia, the challenge is huge. As you said, Michael, the estimated annual infrastructure funding needs in developing and emerging Asia is $1.7 trillion per year, which far exceeds the capacity of multilateral development banks and public funds in member countries to fill that gap. We cannot bridge the gap without drawing in much greater amounts of private sector capital. However, far from being the primary source of funds in terms of the private sector, currently the reverse is actually the case, as governments and MDBs make up, on some measures, about 80% of current infrastructure financing, and the rest comes from the private sector. Of course, the pool of available private sector capital is potentially enormous. To give one relevant fact, the OECD estimates that by 2030, the funds managed by large insurance companies, pension funds, and other institutional investors could reach $106 trillion US. Infrastructure assets are also, or should be, an attractive option for institutional investors. The term maturity of assets and liabilities match, the revenue streams are contracted and less volatile and could be a good inflation hedge. The fact that infrastructure often provides mission-critical services positions it as a better credit risk too. So why are we continuing to debate this issue rather than seeing waves of private capital descending on infrastructure opportunities? Our research has identified clusters of barriers, if you like, at 3 different stages. Firstly, upstream barriers. The big domestic policy and international coordination issues which affect and sometimes prevent the creation of the right environment to support investment in infrastructure. In a national policy context, it would be things like not having a proper tariff or regulatory framework for utilities, or a very long process for land acquisition. Anything which contributes to policy uncertainty in the infrastructure sector would be included here. In the UK, we've removed many of these barriers, demonstrated by the significant amounts of private capital coming into our infrastructure sector. Midstream barriers are project-specific impediments, where the design of a project means that there is unsatisfactory levels of risk, including currency or construction risk, or just poor project preparation from a technical perspective. We also include the lack of standardized project documentation across projects in this category, which is a barrier to infrastructure emerging as a genuine asset class of its own. The development of industry templates would go a long way to easing this barrier. Finally, investor readiness on specific markets or lack of readiness thereof is also a barrier to investing in specific individual projects. And then downstream barriers are blockages, which are in the actual financial instruments and are driven by insufficiently developed capital markets or weak credit profiles. We mean things like the lack of adequate political risk insurance to enhance project credit profiles. The AIIB would like to become one of the go-to banks for providing infrastructure financing solutions in and to client countries. We'd like to be a leading institution to crowd in private capital for infrastructure investment. Ultimately, we want to be in a position where the AIIB comes into a market or sector, and when we do so, create a deal flow and crowd in private finance. We'll prioritize sectors within a country, offering client countries tailor-made financial products and expertise. This will also be an opportunity for the AIIB to demonstrate the proof of concept across sectors and projects. When the private sector sees the AIIB going in and opening up new sectors and markets, we want this also to have a crowding in effect on private capital in and of itself. But as you know, our bank is still in the early stages of our development, still in the startup phase, if you like, albeit a well-funded startup. So it will take some time to get there as we build up our capacity. Right now, we are focused on partnering and doing deals sourced via discussions with other MDBs, with project sponsors, or deals that come to us through our engagement through our website and so on. Next, we'll move on to building deals on our own. We will originate, structure, and execute stand-alone deals. As part of this, we are interested in speaking to potential partner organizations. So if you have ideas or areas where you would like to work with us, please let me know today or get in touch after this event. I think there are potentially 5 factors that over time will operate in the AIIB's favor in this space. Unlike other NDBs, we have a very tightly focused mandate. We are solely focused on infrastructure. We don't have other objectives like poverty reduction, for example, though we believe that investing in infrastructure projects, as has been demonstrated, has a dramatic effect on living standards of people over a long period of time. But that means we focus our energies on fewer outcomes. We're an organizational with a commercial bent. We do not offer any concessional financing other than a small project preparation special fund. That fund, incidentally, offers grants to developing country members in Asia to help them prepare projects that we could finance, and for which we're very grateful to the Chinese and UK governments for each committing $50 million to that fund. Secondly, we have a fresh balance sheet ready to deploy. When the balance sheet matures, we'll be able to recycle assets by selling them to the secondary market. Third, we can work across all member countries and are not restricted by income requirements or similar. For example, we've already financed projects in Oman and have recently agreed our first financing outside Asia to a solar power project in Egypt. AIIB's involvement in non-sovereign projects should also be a signal to private sector investments of a government's support for private sector projects, given the bank's deep relationship with our member countries. Fourth, we have a one-bank approach where our investment teams work across public and private sectors, and the institution will, over time, offer a full range of financial products. Our toolkit includes, over time, debt, including US dollar and eventually local currency denominated loans, and over time we'll consider other debt products such as local currency swaps. We also support equity investments. We've already undertaken, in fact, our first equity investments in an infrastructure fund in India and an emerging Asia fund with the IFC, and we will search for more. We will also be able to offer guarantees and are greatly supported in this regard by the 3 AAA ratings from the major international agencies, which were achieved earlier this year. The final piece of this puzzle is the culture of the institution. We're founded on a solutions-driven culture that promotes innovation and excellence, as well as high standards of integrity, openness, and candor. We employ the best of public and private sector approaches, and we want to learn the best practices from other organizations and industries too. These positions combined, but we believe, mean that we are well positioned to have a beneficial impact on mobilizing private capital into infrastructure. That is certainly our objective. But there are a few questions which I would be interested in testing with you during the discussion and listening to the panel's views on. Have we identified the correct problems? Is the emerging strategy for the bank in the different activity streams the right way to tackle this? Is there anything else we need to incorporate in our toolkit to meet this challenge? Now, this journey will take several years to complete, and we hope that we will be able to work with many of you over that period to help us get to the right outcome. And it's just in closing important to recognize why it's important that we do find that right outcome. For me personally, it's a long journey from my early life on the small Hebridean island of Colonsay to living in Beijing today. Yet these two places at either extremity of the Eurasian continent have much in common, and the destinies of all places in between will become an increasingly common destiny. By investing in sustainable infrastructure, we can boost prosperity, boost living standards, and safeguard the future of our planet, not only in Asia, but around the world. That's why this new enterprise is important. It's why the UK's involvement in the AIIB is profoundly in our national interest, and it's why I'm so honoured to be part of the leadership team that is charged with setting up the AIIB. Thank you for listening, and I'd welcome any questions. Thank you. So I've been told to manage my own Q&A session. So if anyone has a couple of questions you'd like to ask me now, then please signal, and then I will look forward to hearing the panel discuss the issues. So if there's any questions, there's a microphone there with a face that I recognize.
Thank you very much. I learned that Colonsay and Beijing have a lot in common. I'm James King from the Financial Times, and I'd just like to ask you, are you currently at full membership of the bank? And if not, then How many more members are you expecting in the nearest future? And will that mean that Beijing gives up its veto power? And secondly, I'd just like to ask, are you now decided on whether or not you're going to fund any more coal-powered power stations? Thanks very much.
Thank you. In terms of the membership part of your question first, so we started with 57 founding members. Almost all of those countries have completed their domestic ratification procedures. I think there are 4 who are still to do so, and we expect that to happen soon. In the course of this year, our Board of Governors has agreed to admit a further 23 members to the bank. And so, of course, those countries have to also go through their domestic procedures. Just last week, Afghanistan completed its domestic procedures. Ireland has recently completed its domestic procedures. I think Ireland has become the 58th member of the bank. And so with those new members, there are countries on every continent except Antarctica who are part of the bank. Canada has agreed to join, many Latin American countries, several African countries, as well as the Asians and Europeans who I mentioned in my remarks. I'm sure there will be a few more countries joining in the coming period, but that's a matter for them, and then we'll put those things to the governors in the new way. But I'd expect that that after that the process will slow down a bit. Of course, when the bank was founded, there were many countries who observed the founding, wanted to see how it was set up, and I think we see the strong appetite to join the bank as also being a vote of confidence in the fact that this is a well-governed institution, meeting the highest standards of governance, that has policies and practices that are entirely in keeping with the way that other multilateral institutions, such as the World Bank and the Asian Development Bank, operate. And of course, applications are welcome. The door is open to any qualifying country. Any member of the World Bank or of the Asian Development Bank is entitled to apply to join the AIIB. In respect of the coal-fired power stations question, the bank agreed our energy strategy at our annual meeting in June, and it's all set out there. The focus of our energy strategy is very much on supporting countries to make the energy transitions that they must make under their commitments in the Paris Agreement and other international agreements. So very much the focus on green energy and on helping that transition. We don't have any coal-fired projects in our pipeline. We don't anticipate any coming forward for the moment. And the energy strategy sets out a series of strict conditions under which we would consider those. As a gentleman, maybe I'll take these two, gentlemen here and then gentleman here, and then I'll allow Michael to move on to the panel.
John C. from McDonald. So the MDBs like EBRD and ADB are helping with project preparation as well as investing in infrastructure projects, and are now mandating the use of the Sustainable Infrastructure Foundation Source platform, which is the new online global cloud-based project preparation platform. I just wonder, is AIIB going to be assisting governments with project preparation? And if so, would you be pushing the use of the Source platform as well?
So as I mentioned in my remarks, we've already established a special fund for project preparation, which is the only part of our toolkit which offers grants only to the developing members of our bank, specifically to help them with project preparation. So, taking a project from being partially developed to designed, developed, documented to a standard that the AIIB could fund. I know that we've had some discussions with the CIF about the Source platform. We haven't worked through those discussions yet, but we're well aware of what it does and the benefits that it offers. And then there was a question here.
You touched upon some of the issues here, and I just wondered whether you might like to sort of hazard an idea of, say, the top 2 or 3 issues on the recipe for a successful investment in infrastructure from the point of view of governments and from the point of view of the actual institutions making those investments.
I mean, what we look for are high-quality projects that are well justified. We look at the economic rationale and the economic benefits of the project. So it genuinely has development benefits and would genuinely make a difference in the country. Obviously, for us, projects have to be bankable. We're not offering aid, we're offering loans or other products on a returnable basis. We have very strong safeguards also around environmental and social policies. And so any project that we finance has to meet those strict conditions, and very often there'll be mitigations or other amendments that have to be made before a project can qualify for AIIB finance. And of course, those conditions are often ones that require strict monitoring throughout the whole life cycle of the project. Our procurement policies require that any project that we finance must have open international procurement on a level playing field, so that companies from around the world have the opportunity to participate in delivering the project. And again, we have a procurement team that monitors the implementation of that very, very carefully. So those are a few of the things that the bank looks for, and we have a detailed process that we go through, from a screening process right at the beginning when a project idea is first brought to us, through to the different stages of monitoring and development of the project with our investment teams, scrutinized by our investment committee, ultimately considered by our board of directors, which represents the member countries. So there's quite a process that projects have to go through. We strive to be lean in the way that we operate. That means that we want to be able to process those projects in an efficient and timely way. I don't see any contradiction between that and maintaining the highest possible standards, and that's the way that we are seeking to operate. Michael, maybe I should stop now and move on to the next stage. Thank you.